Welcome to The Explainer. Today, we're digging into a pretty stark warning from economist Peter Schiff. He's predicting a financial crisis that he says will be far, far worse than the one that shook the world back in 2008.
And he doesn't pull any punches. I mean, we're not just talking about some small market correction here. Schiff's analysis points to a total reset of the financial system. And this quote really sums it all up.
So according to Schiff, this isn't just another blip on the radar, another cyclical downturn. No, he sees this as a systemic crisis that's been building up for decades. It's all rooted in these fundamental policy decisions that have finally, he says, reached their breaking point. So, what's at the heart of the problem?
Well, he believes it all boils down to one thing: a sovereign debt crisis. His diagnosis is basically that the U.S. government is so deep in debt, it can't even afford the interest payments anymore, not without the Federal Reserve just printing more money to cover it. And think about it, right? When the only buyer for your own debt is your own central bank, you've got an inflation crisis, a dollar crisis, and a debt crisis all rolled into one giant mess.
Okay, so that begs the question, right? Why is Peter Schiff sounding the alarm when a lot of the official reports seem, well, pretty calm? This is where you get two completely different stories about the health of the U.S. economy. Let's really break down these competing narratives he's talking about.
And wow, the contrast here it's really stark. The official story, the one we hear all the time, points to a strong labor market, weak inflation. But Schiff says the reality is the total opposite. He points to things like the U6 unemployment number, which is a much broader measure of joblessness, and says, look, it's sitting over 8%. And he insists that real inflation isn't weak, it's strong, and it's actually getting stronger. This is a huge disagreement, and it's exactly why he thinks the Fed is about to make a massive, historic mistake. Now, according to Schiff, this isn't just some random accident. He actually identifies specific government policies that, in his view, are actively pushing the whole system right towards the edge of a cliff, creating a perfect storm for the dollar.
He lays out a few key things. First up, you've got the Fed's policy, cutting rates even while inflation is on the rise. Then you've got administration policies like tariffs that he argues mess with global trade and weaken the dollar's role in the world. Third, and this is a big one, he sees attempts to undermine the Fed's independence, which could basically give the government direct control over the money printer. And finally, he calls out the promotion of crypto, which he sees as a massive pump-and-dump scheme that's just distracting everyone from real, tangible assets.
And he uses this really powerful and kind of scary analogy to drive his point home. The whole banana republic comparison. I mean, that's what he says happens if the government gets its hands directly on the printing press. In his view, that's the final nail in the coffin for the currency's credibility on the world stage. Now, here's a really interesting twist. Unlike 2008, which pretty much dragged the whole world down with it, Schiff argues this next crisis is going to be uniquely American. He actually believes the rest of the world has already started to move on and might even come out ahead when the whole system finally breaks. So what's the core idea behind that? Well, for decades, there's been this unspoken deal, right? The rest of the world produces more than it consumes, saves more than it borrows, and then lends all that surplus to the United States. And that's what's allowed Americans to consume way more than they produce. But according to Schiff, the world is waking up and realizing, hey, this is a bad deal. And that global arrangement, he says it's ending right now. And he says, you want proof? Look right here. It's not everyday investors leading the charge into gold. For 2 years straight, the biggest buyers have been foreign central banks. He argues they are actively dumping U.S. dollars in treasuries to buy gold, basically preparing for a world where the dollar isn't king anymore.
So, in the face of this whole crisis he's predicting, Schiff's big thesis is that the world is quietly going back to the one asset that has always preserved wealth when paper currencies fail, and that, of course, is gold.
So when he looks at gold's recent price moves, he doesn't see some short-term spike. He sees the start of a brand new, powerful phase in a bull market that's been going on for decades. You had this huge run-up. Then it spent over 10 years building this massive base. He believes that base is now the launch pad for the next incredible move higher.
And this is how he gets to that wild forecast. He just does the math. The last bull market cycle saw a six-fold increase. So he takes that same logic, applies it to the new base of $2,000, and that's how he gets a minimum target of $12,000 an ounce. And he really stresses that word minimum, especially if we see a full-blown sovereign debt crisis like he's predicting.
But for Schiff, the real story, the one nobody is talking about, is in gold mining stocks. I mean, look at this. They're the top performing sector this year, and yet he says mainstream finance is completely ignoring them. To him, that kind of disconnect is a huge signal for just how early we might be in this whole trend.
And it's not just about gold either. Schiff is also pointing a huge spotlight at silver. Historically, it's kind of lagged behind in these cycles. He sees it as just deeply, deeply undervalued with the potential for an even more explosive catch-up move once it finally breaks that key resistance level of $50 an ounce.
So, when you put it all together, the big takeaway from Schiff's entire analysis is this. He argues that what we're seeing, the actions of central banks, the dollar struggling against real assets, the miners outperforming everything, it isn't just random market noise. No, he sees it as clear evidence of a coordinated global pivot away from the US dollar. And that leaves us all with a pretty provocative question to think about.